If you want to understand Bitcoin ownership, you need to understand one thing: the private key. A private key is one of the most important parts of Bitcoin. In simple terms, a private key is what gives you control over your Bitcoin. It is not just a password for an app, it is the core secret that proves ownership and allows transactions to be authorized. A good way to think about it is this: if Bitcoin is digital money, then the private key is the secret that lets you unlock control over it. Whoever controls the private key controls the Bitcoin connected to it. That is why private keys are such a big deal. In the traditional financial world, your money is usually controlled through accounts, banks, usernames, and customer support systems. In Bitcoin, the model is different. Ownership is tied to cryptographic control. That means the system does not ask, "Who are you?" It asks, "Do you have the correct key?" If the answer is yes, the system recognizes that control. If the answer is no, it does not. This is one of the reasons Bitcoin is so powerful, but also why it requires responsibility. Because if someone else gets access to your private key, they can control your Bitcoin. And if you lose access completely, there is no reset button in the traditional sense. Now, in most modern wallets, you do not directly type or manage the raw private key every day. The wallet software handles much of that in the background, but the concept still matters because even if you never see the private key itself, it is still the foundation of ownership. So when people say things like self-custody or not your keys, not your coins, this is what they are talking about. They mean that real ownership depends on who controls the private key. So what is a private key? A simple answer is this: a private key is the secret digital key that gives control over your Bitcoin. It is one of the foundations of Bitcoin ownership. And understanding that idea changes the way you think about money in the digital age.